Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 17th of September. Starting off with the FTSE 100, which is still within that rising trend channel from June, still above the 50-day line there at 91.39. Just bouncing off the floor of that channel there, which is obviously a relief towards the 9200 level, about 91.95, the intraday low. Above that price channel floor, obviously looking for the all-time high, 93.57, and best case up to 9500 by the end of next month. On the downside, hoping that we won't get anything lower than the 50-day line there, just below 91.40. The other point to note is we've had an RSI 50 rebound, which is one of our favorite signals in terms of a leading indicator on the upside. So let's see if that one works. Moving along to the DAX, and here it's been a struggle at the floor of that rising trend channel, which has obviously now been broken around 23,600. Below that, we've got the risk of the 200-day moving average, 22,700, which would also break post-June support. That would take us back to where we were back at the end of April, which is obviously not a great look. The idea that we'd had multiple RSI 50 failures has actually, and that would take the market down, has actually come to pass. Although it actually has to be said, probably one would expect even worse than that on the downside, given how many failures that we've had below RSI 50. So that 200-day line probably a reasonable target while we're below 23,600. Moving on to the Dow, and here you can see that we're stalling a bit, but still stalling in a good place. The main support here is 45,000, which is not only the old resistance, but also the area near the 50-day moving average, 44,850. And while we're above that combination, still looking for up to 47,600 as a target by the end of next month. Obviously, at the moment, things are a little bit soggy, and one might have to factor in a test of that 50-day line and old resistance before we have a chance of going up again. Moving on to Bitcoin, which I think has felt the benefit for a bit of hype in the media. Here we can see that we've got the market still finding support at the 50-day line, which is great news, 114. Above that, looking for a break of recent resistance around 117 to give us another attempt on the highs up to 124. Best case here by the end of next month up to 132, which is the top of that rising trend channel from back at the end of February. We do have a breakdown below the 50-day line, which doesn't look very likely now after the RSI 50 plus rebound. Then it would be down to the 110 area and the price channel floor. Ethereum is next, which hopefully one would assume that if Bitcoin is up, then Ethereum is up, but not quite the case here. We've bounced up, we are bouncing at the floor of that rising trend channel from July. Trying to work out exactly where the top of the channel is here in terms of the target, but it is still towards 5,500 while we're above, at least while we're above the floor of the channel, which is around current levels, 44.20. And the 50-day line maybe is our stop loss on an end-of-day close basis, 42.75. The good news here is we're remaining above RSI 50, which hopefully will be a leading indicator on the upside. Moving on to gold, and every day seems to be a bright day for gold. We've pushed through the towards the 3,700 zone. We were looking for 3,800 or 3,850 now by the end of next month, and we might even get that by the end of this month, the way things are going. That's valid while we hold above recent support towards 36.10. Moving on to the stocks, and not that many actually in terms of the sizzle that we've had of late, but one of them has been Bango, which is heading rapidly towards 132, which is the top of the channel, our initial target there for the shares. I suppose above that, then we're looking for the next level up, which would be the upper parallel of that price channel there, and that's heading towards the 150 plus area, if I can actually draw it in. The best case scenario, hopefully, would be that we would hit the 170 area, the upper parallel of that rising trend channel, by the end of next month. But that is the best case scenario at this stage. We need an end of day close above 132, and ideally, we stay on the right side of 110, whatever happens, as that was resistance on the way down. Stock which I don't think anybody's heard of, but here it is here, Celebrus, and here bouncing above a rising 50-day moving average. Normally a good look, £1.70. Looking at the top of that channel there, up to £2.35 by the end of next month. It's a punchy call, but it looks like a punchy chart given the way that we had an unfilled gap to the upside, and then support coming in above the top of that gap back in July. So the longer we stay above that 50-day line at 170, the better this situation looks. Moving on to Empire Metals, where the Lassonde curve did for this the other week, back at the beginning of the month, a couple of weeks ago. You can see now, though, that after bouncing off the old resistance around 30 pence, we seem to be making an effort to revive ourselves. The key here, though, is to get a couple, or at least a few, end-of-day closes back above that 50-day line around 38 pence. That would then take the shares hopefully back up to 50 pence by the end of this month. What we don't want to see here is any breakdown now below the yesterday's support at 30 pence. You're cautious, you probably wait for a combination of an end of day close above the 50-day line and above RSI 50 to make sure that we are back on track. A stock which has been, along with Hemogenyx, one of the best biotech movers of the recent past. Here looks like we've got a mid-move consolidation breakout there through 17 pence or 17.5 pence. Above that, we're looking for 22 pence. Looking for that by the end of this month or much sooner. On to Fulcrum, which had an announcement today. Here you can see that we're still trying to get through that 200-day line. That's around the 5.75 pence level. Above that, looking for as much as 10 pence by the end of next month. Looks encouraging at the moment. We've had an RSI rebound above neutral 50, and we've got that 50-day line now rising as well. So hopefully an end-of-day close through that 20-day line for the first time in a long time could be the trigger for a lasting turn around. On to Genicode, and here, second day of spiking, you can see that we've basically hit the top of that falling trend channel there. That's been in place since April last year, and we're looking for 7 pence now. If we can get an end of day close through 5, we're looking for 7 pence plus by the end of this month. What we don't want to see is an end of day close back below the 200-day line around 2.6 pence, but hopefully we stay on the right side of 3.5, as that was resistance on the way down. On to Hemogenyx, which seems to be serving up a blockbuster RNS every day. Here you can see that we're in the range between 12 and 16 pence. So 12 and 16 pence is what we've been looking for. 12 and 16 pounds, rather, is what we've been looking for as a potential range. But the main thing here, the main win here, would be a break of the £16.50 area, as there's nothing really in terms of resistance between 16.50 and that spike high that we had last month at £25. In the meantime, we want to see the shares remain above £12 if we can. Onto a name which probably most people haven't heard of, Imaging Biometrics, and here nice breakout of that falling wedge there through 0.6, we'll call it 0.7 pence above that. Looking for as much as 1.2 pence by the end of next month. Obviously, there is some resistance there towards the 0.85 pence level, but we're assuming that now that we've broken that line there from March, we are on to 1.2 pence by the end of next month as a best case scenario target. Speaking of best case scenarios, the best case scenario here for Mast would be a quick return back to 200 pence plus before the rather calamitous RNS that the company put out last week, unnecessary one, I think, as well. At the moment, we're above the sharply rising 50-day line there at 99 pence. The next level up is towards the £1.35 area, which was resistant, but was support rather on the way up. We had an old target there through 140, but looking for 135 now, while we remain above that 50-day moving average. We could celebrate today an end-of-day close for the side back above neutral 50, so that would potentially accelerate the recovery here after that rather sharp rug pull for the stock. Nexteq is next, and here we've got the shares rapidly approaching 90 pence, which was our target there at the top of that triangle there from December. We've also managed to, we're also approaching the top of the gap there at 88 pence, but obviously 90 pence would fill that gap. Next level after that around a pound, which was the 1 year resistance for the shares. So hopefully while we're above 80, we are on our way towards that £1 zone. On to the last two. The first one is a surprising one, THG, which is having an attempt at breaking the 200-day line there at around 34 pence. We haven't been above that properly for a long time. We could say back in May last year, and so we are potentially here in a situation where it's a major turnaround, especially while we're above the 50-day line there at 30, just under 31 pence, above 31 pence. Hopefully on our way for a target towards 40 and maybe low 40s by the end of next month. RSI 50 rebound as well, helping the cause on that situation. Finishing off with WeCap, which I think should have gone up more than it has so far, but there's plenty of time. We're bouncing above a rising 50-day line and looking at 2.75 pence, as I said yesterday. That's it for me today. More updates tomorrow.